Hey, what's going on? This is Ola coming to you live from my Empire Pro studios. On this particular broadcast or rebroadcast, whichever one you're watching, we want to talk about 8 ways to find wholesale real estate deals. Okay, 8 ways to find real estate wholesale deals. We're going to talk about here. So let's have some fun talking about this. This topic is actually the driving force of a real estate wholesale business or wholesale real estate business. Or so to say, same thing. Wholesale real estate wholesale, real estate wholesaling, same thing. Okay. The driving force behind this is actually this topic very much. This topic is it's a video you will find very useful for a long time if you ever get lost and you're trying to find out why we go to these 8 different places. Now, if you're brand new here, my name is Ola. Like I said earlier, you can get this book is absolutely for free at smartrealestatewholesaling.com. Make sure you get a copy of that. It's a book you need to read 10 to 15 times. And also, if you like it in the paperback like this, or you like audio or Kindle, it's also available on that same spot, or you can go to Amazon if you want. It's called Smart Real Estate Wholesaling, smartrealestatewholesaling.com. And we do have a $10 per month mastermind at 3pillarsystem.com. That's 3pillars, 3pillarsystem.com, one S, 3pillarsystem.com is the system that we basically build our real estate wholesaling business around for the past 13 years. All right, so let's get started. So 8 ways to find wholesale real estate deal. What is wholesale real estate? Let me just define that really quickly in about 30 seconds, just in case you stumble into this video and you like real estate, but you're not quite sure what real estate wholesale is, right? Real estate wholesale is basically the art and the science of finding deeply discounted properties. Okay? Is the art and the science of finding deeply discounted real estate properties. Why are we finding these things? Because there are people willing to pay you very lucrative amount of dollars just for finding deals. Okay, so it's a real estate investing strategy, and so you can decide to buy the discounted properties you find. That means, because basically in real estate investing, the idea is you buy low, you sell high, right? But as a real estate wholesaler, the idea is to buy low and then you find somebody who can buy it at a higher price, but they still want to buy it lower than the market value, because the idea of them buying from you is because it's an investment. Okay, so they're looking to make money too. But really, as a beginner, if you're a brand new beginner, the place you want to focus on is finding deeply discounted properties. So you can see why this topic today, 8 ways to find wholesale real estate deals, it's actually very important. Now, we already know what wholesale real estate is. What about a deal? What makes us define it as a deal? Generally, you want to be at 65% or below of the after repair value of the property. Okay, so once the property is in good shape and you can put on the market to sell at a regular retail, what is the value of the property? If it's $100,000, as a real estate wholesaler, you basically want to go under contract at $65,000 minus whatever it costs to repair it, or less. Okay, so as you can see, you have to find deeply discounted property, but who is willing to give you their property for that much less, right? Well, just think about any type of product in the world. It could be a pawn shop. It could be um, it could be any type of pawn shop, where people take their properties, but they accept less because they really need that money. Okay, so it's about looking for people that really need that money, people that really need to get out of a property, people that need to exit out of a situation. All right, so that's what it's about, and that's where you make money in as a wholesale real estate professional. Okay, so this book right now, the idea is to help you become a professional. There's too many people roaming around the streets that are not really professionals, people that went to YouTube University and they're not willing to invest a little bit more into learning how to become a professional here. After all, you're on YouTube University. There's nothing wrong with that. I'm just saying there are too many people that don't take the profession as serious as they should. And sometimes that messes up things for those that take it serious. So stick around here with me. Make sure you subscribe to the channel. If I say anything that makes any sense, make sure at least once you hit the like button to make sure it lits blue. So right now, let's get into the first way to find real estate wholesale deals. The first way to find real estate wholesale deal is vacant properties. Okay, vacant properties. Okay, so think about it. Majority of the 8 different types that we're going to talk about, the first one being vacant, are going to be properties that are not performing. Okay, we call them non-performing assets. Okay, meaning any property that's sitting on a land somewhere in the United States of America must be producing some kind of income or some kind of value. Okay, it could be in the form of you live in it. Okay, that's still money, because if you didn't live in the house you own, you would be paying rent somewhere, so that's still money. All right, so when you have a vacant property sitting on the land somewhere, it's clearly not performing because it's not occupied, right? And the way you will see them in your neighborhood or in inner cities, with overgrown weeds, with boarded up windows sometimes, but basically you can see signs on the outside that the property is vacant. If you find such properties, those are your ideal deals right there. Okay, so now there are multiple ways to go after them, or to find these properties. Some people say drive for dollars. I do not encourage drive for dollars unless there are other things that you're driving about. Of course, if I'm driving by and I find the property is vacant, I'm taking down the address. But the idea of my business is surrounding driving around for dollars. I still haven't, it's been 13 years, I haven't wrapped my mind around it. Doesn't sound like a very productive thing. Now, it's been very productive if I'm just about, naturally, I see this kind of properties, I'll write down the address and I will research the name of the owner and find the person and offer them a cash offer. Okay, but the idea of just getting out of my house just to go and drive for dollars, like, that doesn't really add up for me, because that's number one, burning gas. There's a lot more productive thing I could be doing with that time to even find properties faster. There are lists of vacant properties on the internet. There's really, I don't see the value in just driving around to do that if you're busy enough and if you value your time. But to each its own. Some people swear by it, driving for dollars. My favorite way is to find their phone number and give them a call, especially if you're a newbie. Okay, if you're a newbie, find the phone number of the property owner. It's public records. The owners of this property is just, the information is public records on the tax public record. Find that information and give them a call, and it's really that simple. But of course, we try to do that with speed. Automation, we do a lot of those. Okay, that's our topic for another time. So the first one is vacant property, specifically because that property is sitting down. It's not serving anyone. No one lives in it. No one is making any kind of tenant money from it, and chances are is burning into the pocket of the owner. So if you can find the owner of a vacant property, that's a good way to find a wholesale real estate deal. And every time a property is sitting on the land in America, right, there's some kind of cost that's incurring, right? You can start from taxes. Okay, you can start from enforcement codes, writing a ticket on the house, right? And there may be other liens against the property, right, that it's not being paid for because clearly the house is not producing, right? So that's one reason why vacant properties is one of the ways for you to find wholesale real estate deals. If you want to know how we go after them on a step-by-step basis, just join us in the mastermind and we'll go through that. The second way of finding wholesale real estate deals is absentee owners. What does that mean? Absentee owners are people who purchase a property, but they don't really live in the property. The property is, however, or may be occupied by other people, okay, by a family member or a tenant, right? Bottom line is that the absentee owner does not leave, the person that owned the property does not live in the property. And there's, you can even take that a step further. There's something called out of state absentee owners. They don't live in that same state, which means they will have challenges with being a landlord outside of state on an average. Okay, those kind of people are usually tired landlords, and they are some of them are willing to get rid of a property at a discount. Remember, what we're looking for is deeply discounted properties. Okay, so absentee owners is the second way. Now, could you think about this? Could you think of a possibility where a house is as an absentee owner prospect, but it's also a vacant property? That means the house is vacant, but the landlord, actually the owner of the property, lives out of state or lives not in the property. Obviously, every vacant property is also an absentee owner because they don't live in the property. So could you think of a possibility of the two scenarios happening together? Is an absentee owner as a vacant property? Well, all vacants are by default exactly that, right? But it could be out of state owner. Think about that. So those are two different reasons why this seller may be motivated enough to sell at a discounted price, okay, which is what you're looking for. So we'll call that stacking. There's another topic about stacking where you could find a way to stack all these different motivations. It's just another reason why they must sell at a discount, and the more of that you have, the better. Some people want to move, some people want a tired landlord, some people are tired of monitoring the property from like 3 different states apart, or dealing with property managers that are not authentic, that are not honest, right? And some people are just tired of all of that. It's not worth the money for them, and they just need to get rid of the property. Those are right there your prospects. So that's two ways to find wholesale real estate deals. Usually they just want to be out. They don't want to deal with this. For some people, the heartache and the challenges of dealing with of being a landlord is bigger than the money that they make from it. Some of them are not even making money from it. Some of them are having a negative cash flow on it. Now, the numbers are the numbers, but as long as somebody is motivated enough and they need to get rid of a property, then we can always work something out. And that's how we find wholesale real estate deals, the first two ways. So let's go and talk about the third way to find wholesale real estate deals: pre-foreclosures. Okay, pre-foreclosures are not the same thing as foreclosures, okay? But clearly they are pre-foreclosures, before a foreclosure happens. How do we know that? So I'm going to give you an example for New Jersey. For every state is a little bit different, but it's basically the same concept, okay? So in New Jersey, when somebody is 3 months late on their mortgage payment, right? They are put into a public record called a lease pending, okay, which is another language for pending lawsuit, or some people call it an intent to file foreclosure, right? And that right there is called pre-foreclosure. Okay, so anywhere between when they stop payment, right? When they stop payment, like literally as soon as they're late on the payment, anywhere between that all the way to when it's actually foreclosed on, when there's an actual auction on the property, right? That's what you call pre-foreclosures. Okay, anywhere from when you stop, when you miss a payment, right, to when they actually foreclose on the property, which means they sold the property at the doorsteps of the sheriff of that county. uh that right there, that space between that is pre-foreclosure. Once they actually sell it, or many a times when the bank takes it back. So a lot of time people owe too much money on the property. Let's say they owe $350,000 on a property that's worth $200,000. Basically, the bank will try to get $350,000, but of course, nobody in their right mind will pay $150,000 more than what the property is worth. So the bank will be forced to take the property back. They buy it back themselves, okay, so that they can do more analysis, but they still foreclosed on it, right? After that point, when they foreclose on that property, either the bank buys it back themselves, or they actually sell it at the auction. That point on is called foreclosure, and at that point on, if it's actually the bank that bought it, then it's called a REO, a bank owned, or REO, which is a short for real estate owned property. Then you have foreclosure, okay? But before the actual foreclosure, there's usually about 10 to 11 months to 12 months space there, depending on how busy the county is. or the sheriff that do the auction, depending on how busy they are. A few years in 2008, a few years ago, when everything was foreclosure everywhere, there were properties that didn't really get foreclosed on for another 5 years after they actually stopped payment. All of that is pre-foreclosure. So pre-foreclosure is a great point where you can find wholesale real estate deals. Basically, it's a public record that whenever somebody is late, at least 3 months late, they get the 30 days late on they're gonna get that stamped on their credit, 60 days, 90 days. After 90 days, they get that reported and it becomes public record. Everyone can see who is in pre-foreclosure, right? It hasn't been foreclosed on, they still own it, but they have a reason why they may need to sell. Okay. So pre-foreclosure is a great place to find wholesale real estate deals, because it's another additional motivation level to want to sell. Okay. All right. So let's keep going here. So that's what's the third. The fourth way is the bank owns. Okay. So the bank owned is basically what I just said. Everything before foreclosure is pre-foreclosure, right? But after they actually get foreclosed on, two things can happen. It's either some kind of investor were able to purchase the property for very cheap at the auction, or the amount owed is way much more than what the property is worth, and then the bank will still buy it themselves. They buy it from the sheriff themselves. At that point, you have a bank owned property, and what the bank does is they they do an analysis of what the property is actually worth, and then they list the property back with a bank owned or REO agents. They are regular real estate agents, but the bank has a relationship with them and they list these properties with them. So bank owned we usually would have assessed the value of the property. Sometimes the value is still delusional, it's not worth what they say, but they are good people to approach the agent and put an offer on a property, right? So if you have a solid relationship with them, you can still wholesale this kind of properties. If you don't have relationship with them, the agent will frown at you and say, no, it's listed on the market. If you want to put an offer, put an offer. But as a wholesaler, you need a relationship of some sort. And sometimes it's just you're licensed. So if you're a wholesaler who is also licensed, there's nothing wrong with that. It's allowed as long as you disclose to everyone that you're licensed. Then you can also put those kind of properties under contract. And there's some stipulations to that. That's beyond this topic right now. Okay. So bank owned properties is just another word for foreclosures that were bought back by the bank. Okay. So it was actually foreclosed on, but they really couldn't sell it to a private investor. The bank bought it themselves so they can analyze and list it back on the market and sell. That's another way to find wholesale deals. Okay. So that's the fourth way. The fifth way is called high equity. Okay. High equity, I want to take a few minutes to explain what high equity is and how we are able to find out if a property has high equity on it or not. High equity simply means the difference between what the property is worth and what you owe on it. Okay, that's what equity means. So a property is worth $300,000. You only owe about $150,000 on it. That property has $150,000 worth of equity in it. Okay, so if you own a property that's worth $300,000, but you only owe $20,000 on it, that property has 300 minus $20,000 in equity. That's what, $280,000. That's a lot higher than 50%. That's considered high equity. That means the owner may have other reasons why they need to sell, but they're also able to sell right off without having to pay too much money to banks or anything like that. So if they're able to sell that property at $120,000, they're able to pay off the $20,000 they owe and still have $100,000 in their pocket, and you're able to pick up a $300,000 property at half the price, 50 cents on a dollar. So it works out well. That's why some people pursue high equity. Now, how do we find out that they're actually high equity? They're listed on all these different sources. You can go to listsource.com. You can go to myEmpirePRO.com. And if you join us, we have the ones that we recommend in the mastermind 3pillarsystem.com. But for less than $100 a month, you have access to all of these lists, by the way. So how do we know what these people owe? Well, the mortgages they own against the property and the taxes, right? a public record. You can literally call your county and they know what anybody owes on any property, and they'll give it to you because it's actually public record, because it's real estate, right? Now, on top of that, how much was actually paid for the property and the last sale date is actually public record too. You have the authority to have access to that information for as long as that property is a property on this United States soil. Okay, so you know how much they paid for it, you know how much they owe against it, you know what the value today is. There are softwares that have been created for less than $50 that you can literally that would literally do all the calculations for you and tell you if there's a high equity in the property, how much is owed minus how much is worth, and basically they give you the list of all the property that has high equity on it. That's the fifth way to find wholesale deals. Remember, wholesale deals are basically properties at 50, 60 cents on the dollar or less, minus the repair cost. That's what wholesale deals are, right? So high equity is the fifth way to do that. The sixth way to find wholesale properties kind of require a little, the sixth and the seventh way require a little bit of either a skill, number skills, right? Organization skills or relationship skills. And I'm going to explain what I mean to you. The sixth way is called low equity. So I just spoke about high equity, right? The sixth way is low equity, which means this person owes a whole lot on the property, right? More than 60, 70% of the property value is actually owed against the property. So you have a $100,000 worth property, you owe $80,000 against the property. That's low equity. There's no equity there because even if you're trying to sell, all of that can be easily swallowed by closing costs, right? And some other bills you may have here and there. There's no money in the ownership of the property. You own it, but there's no money. It's kind of like the same level where you are, where you just paid for a property using a conventional 80/20 loan, or you use a 97.5 or 96.5 FHA loan. That is low equity. You don't own any ownership in the property yet from a number standpoint, from an equity standpoint. That's called low equity. You can also go after them because some of them need to sell. But if they need to sell, then you basically we end up in a situation where they can't really walk away with a lot. Plus, you will have to find a way to negotiate what you call a short sale with a bank. Okay, another thing you can do as a wholesaler, again, remember, if you want to go after this, you need some kind of organization skill set, be able to calculate numbers and be able to see beyond the impossible, right? Be able to see into impossibilities. If somebody owes 97% against a property, right, and closing cost is typically around 5%, right, that's already negative equity, right? In that situation, you will need to do a couple of things. Okay, the first way is you can use short sales. Like I said, you basically negotiate the kind of deal you want with the bank that they have the mortgage against. That's one way. The other way is what you call a subject to. A subject to is basically the only way to make sense is if there's income coming in on the property that's basically bigger than the expenses on the property. Okay, so on taxes, on maintenance, and all these other things, let's say your cost every month is $1,000, and basically, but the rental coming in on the property is about $1,500. So you have $500 on the monthly thing right there. You can do a subject to the existing mortgage, meaning you give them some money, whatever money they need, right? And you get on the title in exchange for getting on the title of the property. So you now partly own the property, and you basically take over the payment of the mortgage and all this other cost of owning the property. You collect all the rent, and the difference is yours. And you can structure a deal where you can sell the property later and they still make some money or not. It depends on the agreement. Or you can structure a deal where any net proceeds from the property ownership every month plus the future sales, you do it together. But the point of that is it helps solves the problem of the homeowner that needs some money up front immediately. Now they have some reason, they have some personal issues, they need some money. So because low equity means they can't really sell unless they negotiate a short sale, which can mean some other negative things. So bottom line is that you can come to the table with a solution. As a wholesale real estate professional, you're a solution provider. You're not just an investor. You are able to invest because you invest using your solution, your problem solving skills as an investment vehicle right there. Okay. So that's what low equity, but it applies to the next one that I'm going to talk about right now as well too. Upside down is the seventh way for you to find wholesale real estate deals. Okay. Upside down means they owe a whole lot more than the property is worth. Okay. Somebody that happened a lot in 2008, 9, 10, right? People owed $450,000 against properties that were only worth $200,000 in the market in the last 6 months of the market. So for them to sell, they have to come out of pocket with an additional $250,000 in order to sell. They have to give that to the bank because they owe 450. So $200,000 comes from the buyer. They have to additionally had $250,000 in order to make the deal go. Who's willing to do that? Virtually nobody. Right? So that's called upside down. That means negative equity. Okay. So the same way that we have this information, you know how much it was sold for, how much it's worth right now. You can tell if there's equity in the property, if there's no equity, low equity, high equity, or upside down equity, negative equity. Basically, the same solution you applied on low equity is what you can apply. You can either do a short sale, which means the bank is taking a loss, or you can do a subject to deal if there's rental or income on the property that can justify how much it costs to own the property every single month. Um, that happens, believe it or not. If that happens, then you can structure a subject to deal. You can do there are other scenarios too that can be applicable as well too. But again, that's another. If you want to go after that, that's the eighth source of leads for wholesale real estate professionals. Okay, sorry, that's the seventh. Okay, the eighth way is called free and clear. Okay, free and clear means they don't owe any money against this property. How do we know? Because the mortgage record shows no money against this property. They don't owe any taxes. The only thing is that they have to keep paying the taxes because every property in America, unless you're a non-profit situation, a special subsidy situation, most properties have taxes, property taxes they have to pay. That's just what that is. But I'm talking about mortgages, any other type of lien, nothing is owed against this property, and they own it free and clear. And we know what the property is worth because we can see comparables, other properties in the area. That's public record, right? So free and clear means they don't owe anything. You can also decide to go after these people and offer them cash offer. They don't have a situation, a problem of being able to sell you at any price they want, but they may need some cash. So if you're able to give them 65% minus the repair cost, or some people say 70%, either way, and they're able to say, you know what, this property is worth $100,000, it needs $10,000 worth of work. 65,000 minus $10,000 worth of work, that's $55,000. You offer them 45, they say, hey, give me 47, you have a deal. Because they don't have to decide what the bank, there's no banks. Okay, it's free and clear. They don't have to decide anything. Basically, they just pay their closing cost, you pay your closing cost. It's a deal. Some people strictly go after free and clear properties. Some people say, no, $55,000 is too low, but I need some money. And you may be able to say, you know what? You don't have to sell, but you know what? Because they don't owe any money against the property, you can buy subject to still. Not really subjects because there's no mortgages, but you can do owner financing. They finance the deal. They act like the bank. You give them upfront money of what they need. They may need just $20,000. They still own the property with you. You get on the title. They still own the property with you, and you can basically decide what you want, how you want to profit from the property long term. There's no limits. It's completely up to you. You solve their problem of needing $20,000 in that point in time, right? And then you can do. Now, how do you find the cash? You find cash buyers as usual that's willing to get into that deal with you. Of course, it needs to make sense from a profit standpoint, both short and long term. Does that make sense? So that's the 8 different sources of leads for you if you're into wholesale real estate and you're looking for wholesale real estate deals. The bottom line in all of this right here is that the more of those 8 of those eights you can find in a particular property, the more motivated they would be, right? And you want to keep it simple. Just ask if you're willing to entertain a cash offer on your property. Yes, no, maybe. How did you get my number? F off, whatever. They give you all these responses. You're just looking for a yes. There's about 6 other different answers they will give you that you can turn to a yes. And there are skills behind that. And that's what we cover in details on a regular basis inside at the 3pillarsystem.com. If you want to join us, only $10 per month. And also, in addition to that, you have access to our network of cash buyers around the nation, and we can help you. We can JV with you. We can do all sorts of things together with you to get you your first deal, your next deal, your next deal, your next deal, and your next deal for as long as you want. But it's a great community to join. You can join us on WhatsApp, on Facebook, anywhere. Don't forget, get the book. This book is absolutely free. It's a 300-page book, pages book that you can get at smartrealestatewholesaling.com. And smartrealestatewholesaling.com is also available in audio, Kindle, and paperback like this if that's what you prefer. And hopefully you've been enlightened and educated. Please click like at least once. Make sure it lights blue before you leave this video, and share this video. If you have any questions, any additional opinions you want to add onto this video, feel free to use the comment box below. If you think I'm not loud enough, I talk too softly, right? Please leave that in the comment box below, and I'll see you on the next one, and peace.